If you think you need to be rich to invest in the stock market, you are buying into a myth. You are being fooled. I'll tell you why. Warren Buffett, the billionaire extraordinaire, didn't just waltz into a pile of cash and investments. Nope. He had to hustle from the get-go, starting with nothing but a paper route and a dream. From there, he scrimped and saved, making his first foray into the stock market with the pennies he earned. And the rest, well, let's just say it's the stuff of legend. And his bank account is a testament to that. Be sure to stick around the end of the video to learn 2 concepts that has made Buffett billions of dollars and how you can put his mental mindset to work for you. A bunch of folks out there think investing is just another word for gambling. They throw their money at stocks without really knowing what the hell they're buying, all in the hopes that the price will skyrocket. Buffett, with his simple yet powerful approach to investing. Unlike the rest of us plebs, who see shares as just another way to gamble our hard-earned cash, Buffett sees them as a slice of the company pie. He's all about finding those golden goose companies that are priced just right, and then he cozies up to them for the long haul. Now don't get me wrong, even a financial wizard like Buffett can't predict the future. That's why he spreads his bets across multiple companies, like a savvy gambler who knows when to hold them and when to fold them. But hey, if you stick to these concepts discussed later in this video and keep your eyes on the prize, you might just find yourself rolling in the dough like our boy Warren. There are 2 methods that Warren Buffett used to make money off of the stock market. One, it to buy when a good company is undervalued and the stock price is low at that time. You can see this in action with his massive Coca-Cola investment like a boss. He's been sitting on this bad boy for 30 years, patiently waiting for the cash to roll in. When Buffett makes a commitment, he honors it and holds steady for years. In his annual love letter to Berkshire Hathaway shareholders, Buffett spilled the beans on his investment strategy, saying, "My investments in Coca-Cola and American Express are like the trophies on my mantelpiece. They show off my genius and make all the other investors jealous." His initial investment in Coca-Cola was a cool $1.3 billion, but now those shares are worth a whopping $25.6 billion. That's a 1,969% increase. Even as we are not billionaires like Buffett, we could have still ridden that gravy train and made some serious bank. So what's the secret sauce? Well, it's all about finding a company with a killer competitive advantage in a market that's always thirsty for more. And if you can snag those shares at a bargain price, you might just find yourself sipping on a rum and coke in a tropical resort and counting your cash like a boss. So how do you find a competitive company? Subscribe, as I am working on a video that will teach this. Alright, let's talk about the second way Warren Buffett has been raking in the dough from his Coca-Cola investment. Dividends are like the cherry on top of your investment sundae. They're not guaranteed, but when they do come, it's like finding an extra 20 bucks in your pocket, or in Buffett's case, an extra $20 million. Coca-Cola has been doling out dividends like candy for over 60 years, and this year they're shelling out a whopping $8.4 billion to shareholders. Buffett's initial $1.3 billion investment is now earning him a sweet $700 million in dividends every year. That's right, millions in passive income. A word of caution here, Coke's got a sweet setup, but they're not immune to the buzzkill of people ditching sugary drinks like last year's fashion trend. In addition, skyrocketing energy costs could put a serious dent in their bottom line. Warren Buffett hasn't bought any shares Coke stock in 3 decades. Does he really need to? That's the question. He got in early and he went big. When you know you have a good deal with a good company that is poised to remain competitive, you can make bigger moves based on sound business principles and data. Warren Buffett was patient and very careful with the limited money he started with when he began to invest. We need to exercise the same mental approach to investing in stocks that has made Buffett a billionaire.